Hello, this is Dave, and welcome to Equities Story. I'm with the Mr. Amazing Wolfie, and this is just a general share advice and not personal advice. Wolfie.
Yes.
It, the dark arts predicting this little bounce, and
Mm-hmm.
it looks like we're having a little bouncy here, Wolfie, especially on the Dow, maybe coming back up to trend. I don't know, Wolf. Is this the bounce before the crash, or is this the bounce and the recovery?
I don't know, but I look the more little snippets of information I'm getting, the facts I'm getting out of the US is maybe that peak inflation as behind us now. But saying that, there's still a lot of issues around. So we'll see. If higher, I don't think we're going to go back to those below 2% inflation. It's still going to be elevated if we are past the peak inflation, but it's going to be elevated if it's elevated, there's still going to be interest rate rises. So don't worry about that. It's still going to be volatile times ahead, Dave.
Well, Wolf, we were looking at these charts today, right? And it's on the S&P 500, which is a little bit more sort of broader range, yeah. And this is why I think you're so sort of interested in these earnings results that are coming out of America at the moment. And really, because what the markets tend to do, over a period of time, stocks are valued on forward P ratios, and there's a whole different number of assumptions here that you've got, right? Whereby, you can see a little bit here, Wolf. Can't see it really too well, but basically in that first column, you've got sort of a fairly robust economy, and the second column down here, you've got maybe more of a mild recession, more a serious recession. So you can see there's a huge range where this market could go, dependent on earnings coming out of America over the next sort of 4 or 5 months. And you can see here, obviously, if we had like a GFC, well, we could go a lot lower. If it was a mild recession, well, if I'm looking at the S&P 500, we could come back down to around 2,400. So there's a number of scenarios that could happen, but I suppose it's all about those earnings coming out of America and those earning numbers, and how badly inflation is going to affect those margins, how badly a recession will reflect any of those margins. So
and how far the markets are prepared to put mark them down. That's the other thing,
definitely.
Right?
And so what I've been busy trying to do is understand why, the charts are cyclical, and the charts are saying we're going to have a bounce and then a crash in September, right? So what I'm trying to do, Wolf, is put some fundamentals and really, it's hard to put fundamentals obviously on technicals in a way when you're looking at sort of future earnings, but it all depends on those earnings numbers coming out of America, doesn't it? And how badly America is going to be affected by inflation, and how badly it's going to be affected by the recession. So enjoy the bounce, but we still have to be very, very careful. That's what I'm saying.
Yeah, we do. You've got to be cautious because, like you said, I mean, we've got a next period, probably the next three months odd. I'd say it's going to be pivotal where we go from here. Because, like you said, if we are technically in a recession that we don't even know about yet, the numbers will probably tell the story in a couple of months' time, and how well these companies have fared with them. It's going to tell us a picture of where the market's probably head from here. Like, I think what you're saying seems pretty spot on. We've got a little bit of a bounce at the moment. There's some excitement going on in the tech space where some people are picking some bottoms of some stocks, which have been oversold significantly. Enjoy the little rides. Let's hope, like you said, let's hope it's not as bad recession. Let's not hope it's bad, the earnings, that it is actually positive, and maybe the market can get over this hump, and this is as low as we're going to go. But personally feeling, Dave, technically, well, not technically, fundamentally feeling for me is this. I still think we're really at the strong crossroads here. We could go back to that 3,000 points for me if I'm looking at this, right? If the market
so a 60-year average, Wolf, if we had a mild recession, would be around that 3,000 on the S&P, and that's somewhere where you're sort of you're sort of thinking maybe.
Yeah, I think look, if my thoughts are if we're going into the recession, the earnings are not going to be as good as hoped, then 3,000 could be the point. But remember, it's not going to be across the board. I mean, there could be some sectors actually do quite well out of this, right? Like maybe the tech stocks have been done and dusted. They've been oversold, and it might hold this like it could be the big industrial stocks that could bring all these down to 3,000 points. So.
Well, that's the important point. You've got to take each story on its own merit.
Absolutely. Because we know we've picked some stories that are trading on 5 times PEs. I mean, are they going to halve from there to 3,000 points? I don't think so.
Yeah. Although SWN did.
There are exceptions to the rule, yes.
So, Wolf, let's have a look at one of these stories today,
Yeah, okay.
which again has been sold off
Mhm.
and really came out with a very, very nice announcement today. Can you fill us in, Wolf, with Megaport MP1?
Yeah, look, I'm going to sort of probably change my tune a little bit on MP1 because, I was talking about it that it's just too expensive. It's loss making. It probably needs to go lower. Now, they've really surprised, I think, probably the market because it's jumped 30% this morning. And they've almost overnight from going from a tier 3 to a tier 1 story for me, Dave, where they've gone cash flow positive, EBITDA positive, and they look like they're looking at their costs, even though their costs are still elevated. It is cash flow positive, which means if they can keep that rolling over the next few periods, they probably don't need to go to the market anymore. What a relief that would be for the market. That's why the market's cheering a little bit of this. And I think now it's trading under 10 times revenues, right? So market cap of $1 billion. You've got revenues of annualized of about 120 million bucks. So that's looking now 9 times, 8 times. And when you get a global story like MP1, which is probably a leader in its field, there's always going to be some sort of premium attached to it. So I don't think it'll get back to the 5 times anymore. I thought if it's unprofitable, probably could get the 5 times, but now it seems like to be going into that positive cash flows. It might be the 8, 9 times could be the limit where it's going to go. And maybe this is a buying opportunity now. I'm changing my tune like I've never changed my tune before.
You have changed your tune before quite a few times. Wolf,
you have to change your views even if things change.
Wolf,
yes.
And what you've got with this company is a pretty steady,
yes, exactly,
steady growth, which is something which I know is something obviously you're looking at.
Yep. Look at it. I mean, look at all the key performances, KPIs, right? It seems to be pretty good.
Excellent. So, Wolfie, obviously you look on the charts and you started seeing a little bit of life recently on the daily, and now you've had this little bit of a breakout. Now, unfortunately, it makes it really hard to trade that move when it's had a big move like. So, I think I need this to settle, Wolfie, to see where it comes back to, and have a look at it in maybe 2 or 3 weeks from now. But certainly, if you look on the daily, if you got a little bit of weakness and came back and sort of bridged that gap around that sort of 670 mark, 680 mark, maybe nibble. I mean, I think you want to try and buy it near that trend line if you can.
I agree. I think give yourself that extra bit of support, right, and lesser risk. You want to get it close to that 664 as you can. But like I said, if you take the longer term view, right, maybe around these levels still 780 would be okay-ish. As long as I think you've got to have to that 5-year view, because they're not going to be profitable probably for another 3 years, right? At least. As long as they're cash flow positive and they can maybe do a zero where they can manipulate the cash flows to just not have to be raised every 6 months, then they can possibly do okay. So like I said, if I take the view, buy at 784, longer term view, think to myself, okay, if they keep growing at that 10% per annum, say this could be $12, $13, $14 again, say in 5 years time, would be a pretty good outcome.
And does that, and Wolf, I know you had a little bit of a moan about it earlier, the 60 million a year in salaries they're paying.
Yes, I did. That's one thing that still gets me.
Does that still get you? Does that put you off it a little bit?
Yeah, absolutely. I would. So that's why I wouldn't sell Natalie to get in. Just maybe sell the cat.
Well, you try and get her a job there, wouldn't you, at MP1?
Exactly. Darling, I think they're paying quite well over at MP1.
I think they are. So, So it's obviously it's pretty heavily intensive from a labor point of view, Wolf, which
Yeah, seems to, yeah, doesn't it? I mean, they're paying. I mean, I think that's one of the number one key issues for the tech stocks right now, is attracting talent and paying them the big bucks to keep them there. So the wage inflation is a huge issue for these tech stocks.
brilliant. Thanks, Wolfie. Now, NST came out with an announcement. What's cooking? Terrible price action, obviously, on the charts. Let's have a look at this on the weekly. This looks awful, Wolf. What's happening with our little NST?
Not much at the moment, Dave. Look, I don't think it was that bad a announcement from NST. Talking about the quarterly. The problem is, it's just the sentiment's just zero interest in gold at the moment right now. So, yeah, I mean, it's trading on 6 times PE and a dividend yield of 4.
Right.
Zero interest, but the time will come again for these stories.
SRG, Wolf, we actually looked at this one last night, saying, hello, what a good little chart this is. And you can see why it's had a nice little move up this week. The little gremlins have been chatting to each other and been buying this up on Monday and Tuesday. And guess what? The EBITDA expected to be in the top end of previous guidance, 54 to 57 million.
Yeah, and add to that, Dave, that FY23 EBITDA expected to be 25% higher. I mean, 25% growth for FY23. I'll take that because it's trading on 16 times, 5.5% yield. Thank you.
Very good. Good looking chart. And I think if it looked like this by the end of the week, Wolf, yeah, you'd maybe be looking to have a little bit of a nibble here.
Yeah. If they can hit those 23 targets, right, I think that it's going to probably be higher next year.
Right. Excellent.
As long as the markets behave, of course. That's the caveat.
Wolf, next one off the cab is Iluka. Obviously, technically, not that good, really. We need to get this back over sort of $10, really, to be interested in it.
Mm-hmm.
But what did you make of the production numbers that came out?
Yeah, look, overall, I think it's pretty good numbers there. You've got Iluka, that's like one of my probably favorite stocks in the mining space. So if my views are long-term views on mineral sands and rare earths comes to fruition, then I think a little nibbles around this Iluka's. I'm not sure, Dave. I mean, I'll probably leave it to you technically, but I think if I can pick him up around 8.725, I'd be happy.
For a long-term investment.
Yeah, from a long-term perspective. Yeah.
So we can have a look at it on the monthly and see where you're at. So yeah. So what you're saying, Wolf, really, if you can nibble around even around that $8, you'd be pretty happy.
Yeah, I think so.
Okay, for the long term. So long term, what, like sort of a 5-year view?
Yeah. Yep.
Yes. Thank you very much for that, Wolf. Certainly, I agree with. Obviously, it's not trending at the moment.
No, but another just another cheap mining stock trading on 10 times with a 4% yield. I mean, you don't see that very often from a lot of these mining stocks, to be honest.
And exactly, and what a nice little dividend to boot, Wolf. Nice little 4%.
Yep.
Bub.
Mm-hmm.
Now I know how much you love your goat milk.
You know what? But I'll tell you something. Natalie's starting to making pancakes using goat milk. Bloody nice.
I thought you were about to say you're drinking bubs out of a bottle every night before you go to bed.
Well, I won't say that, but that's also true.
Well,
it's that pancakes on goat milk. Everyone, you got to try it. It's actually very, very good.
All right. Okay. Go. Maybe you could share the recipe, Wolf.
Yes.
Anyway, so gross revenue 48.1 million. That's not bad.
Exactly. Yeah, not bad at all.
It's going places slowly, isn't it?
Yeah. Look, it's hit that purple patch with all this America stuff, right? Can it last? That's the question. Can they turn it into a sustained performance? Bottom line, pretty much. So that's my key here, because we know that they can probably ramp up the revenues, but that probably will come at a cost of the bottom line. So I think that again they got to be pretty good at managing both top line and bottom line at the same time, and that's probably where they failed previously.
All right. At the moment, I could argue the fact
that, is it?
Yes, no. I mean,
Comme ci, comme ça.
Yeah, come see, come saw. You maybe can hold it if you're in it, but it's definitely not trading. And I would actually say, Wolf, come on, for a company that's been putting out a lot of good news, I think the price action's actually pretty poor.
Mm.
You'd
I
expect,
agree, and I think it didn't help with that capital raise, right? The big capital raise. So that's
yeah,
really put a dampener on things.
definitely. Now, 29M.
Yes.
Talk us a little bit about this story,
Well,
Wolf.
I want to actually talk about this because this is quite interesting, right? It had a great start and then it just fell into a heap. There's a reason for that, I think now, and I found it in that report today. So, can you actually open up the report and everyone can see, right? And I'll tell you what page it is. Hang on, which makes perfect sense. So, little 29M is not a bad little producer, right, of base metals, copper especially, but it's a high cost producer. So, there's a page on that. Keep going down, and yeah, right here. The AISC costs year to date, 355, Dave, US per pound, right? Guess what the current prices are of copper?
Less than that.
Correct, 327 or 325, I think it is. So marginal at best and probably loss making right now, right? And I know they talk about, if you look at number 3, they go average copper price excludes final invoice, unrealized cost period, and adjustments and hedging. So I hope they've got some hedging, because if they don't, they're going to be losing money now. So that's why I think you can see the falls. And that's why, Dave, whenever I talk about mining stocks, I want to see costs at the bear case scenario. When things go badly, can they make money in a market that's going into cyclical lows like copper is at the moment, going from almost $5 per pound down to $3.27. So you can see this is suffering.
Definitely, Wolf. But are they? I suppose you need to understand the mine as well. Are they mining the expensive stuff, or?
Look, it's a good question, and I'm sure that it's going to be probably form part of the answer to the whole equation. However, overall, at 355, it is a high cost mine. I mean, if you look at the actual historical pricing for copper, it usually was priced around the $2.50 mark, right?
And you know what, Wolf, you make a great point. So why would you even invest in it? Surely you why have that risk? Surely you just go you go to a low cost mine.
Correct, Dave. And this is why I always say stick to the cream of the cream, because they've got the lowest costs. Even if there was a recession, even if the commodities shit themselves, the BHPs, the Rios will probably still make money. The others won't.
And definitely. And would you have OZL in that?
OZL, I think their costs are in the 2s, I believe, AISC. I have to double check that, so don't quote me on that, but they're much lower than the 355 that they're quoting here with 29M. So, OZL is much better placed than something like this.
Yeah, something like that. Okay, thank you very much for that, Wolf.
Mm-hmm.
SMI. Now, not a bad looking chart, Wolf. Tell us a little bit about SMI.
Yeah, so they've got a nice deposit in Bendigo, Victoria, right? So I'm just trying to sort of work it out where they actually sit on the value chain of the gold player. So they've got about 1.8 million ounces, right? Market cap's not too big, 88 million, right? So I'm sort of obviously comparing it to our little Mika, which like I said, I think it can get to 1 million ounces plus with their drilling results at the moment. So I am sort of intrigued to see where I'm putting this. So this is not too expensive. Well, probably you can say cheap if you think they're going to get a mine up and going in the next 2 or 3 years. So again, I'm going to add this as a potential interest of mine to see where I put this as a gold play on my list. And for me, Victoria's not a bad place. However, it's I think a little bit more difficult because of the chunky nature of the deposits out there. It's not as consistent as some of the other stuff around. So, but anyway, look, I'm intrigued because some of the results they've recently put out were pretty good. So overall, one on your watch list at the very least as a trade somewhere along the line.
Yeah, Wolf, and you look at this and you got the market cap of what, 94 million?
Mm-hmm.
And you have had some good drill results, but they are deep, aren't they? From 311 meters.
Yeah, that's right. So you got to take all that into account, put it sort of in your head and thinking, where does this lie? Where they should be trading this on this sort of results with this sort of deposit and the resource. Yeah, it's a juggling act, and I think I still prefer my little Mika, to be honest, but this is not bad.
Yeah, definitely. Well, thanks for that, Wolf. I definitely prefer your little Mika as well, because it's at 34 meters, their
Exactly.
gold.
So you can
So,
just scratch the surface, Dave, and you got the gold.
well, I could just take.
Get your shovel out.
Well, that's a lot easier, isn't it, than having to build a big tunnel.
Exactly.
Wolf, PLT.
Yes.
What's happening here?
Look, it's a very similar type result to HMY. It's they talking at cash profits, right? Whatever that means for PLT, but it seems like it's cash flow positive, which is good. But this sector again, not very good for an interest rate rising environment. So for me, no. But at least these companies not doing too badly. I mean, look at the numbers today; they're actually pretty good.
Positive cash NPAT.
Yeah, exactly.
Again, yeah, I suppose the market's just saying, okay, I know you're doing well now, but not for long, mate.
That's right. And I think, Dave, this space, if we have the end of interest rate rises and the market gets used to this, and I think this could probably shoot up when we see the end of the interest rate rises. So we go, it's on our watch list, but not yet.
Wolf, talking about, we both listened to the Reserve Governor today talk.
Yep.
I was actually sort of, I think a lot of what he said was very positive. That unemployment is really low at the moment. The economy is, generally speaking, doing very, very, very well. And what I was really interested in is he was saying there's a lot of savings out there amongst mums and dads, which hasn't been there in the past. So the economy is a lot more resilient than one might think, which possibly gives the notion that these interest rates could go up higher than what we think.
Yeah, look, 100%. So I agree. And look, I have to apologize. It's actually not in Victoria. That the previous one, SMI, it's actually in New Zealand. Bendigo. There you go. I get caught out sometimes. Anyway, yes, I listened to that Low talk today, and yeah, I was actually, when I heard him, I was actually quite bullish afterwards. This is great news. We're good. We're much better. We're much more resilient than everyone else out there, and we've always been called a lucky country for a lot of reasons, and this is probably another one of them to add to the arsenal. So I like it.
So one thing that really came, I think, was pretty evident of what he's talking about is the possibility these interest rates could increase a lot higher than where people think they could be. So what industries would that make you really wary about, Wolf?
I think the housing market, one, right? Yeah. You can see the real estate market really troublesome for me with the higher interest rate rises and possibly rising to that 3-4%. That could be detrimental. And how much love affair we've got with this space. So that's probably the biggest danger for me. Other than that, I think when you see the retail spending still, even though, look, Dave, this is the troubling thing for me. I'm bombarded with all these different little signals, and I've seen the actual what do you call it? The surveys done for consumer confidence, and it was like very, very low for a number of months, right? For like 2 years or something. Yet retail numbers for JB Hi-Fi are bloody excellent. So you think to yourself, shit, we're here, we're pretty scared, but we're still happy to spend money on TVs and stuff and so on. So
well, why people have got jobs, there's obviously going to be money around.
Yeah, exactly. And this is the other thing, is 3.5% unemployment. If people are secure in their jobs and there is just crying out, that the economy is crying out for more jobs, people are going to probably still keep spending quietly.
Yeah. No, it's no. So it was interesting, definitely.
Yeah. But anyway, I'm still bullish on the Aussie economy, even though we might have a recession. Maybe I don't now. When I think about it, maybe we won't.
All right. God, you sound so confused. AKE Wolf.
Yes.
Again, below trend, so short term not there. What did you make of the numbers coming out?
I think they missed the target for the big brokers out there, because it's, I think, down 3.5%. So maybe there's something in that. But look, when I had a quick look through it, I don't delve through too deeply into it, and the numbers on first glance okay-ish, but I presume they probably missed some targets for the brokers out there.
UBN, Wolf.
Mhm.
Wow, sort of what a fall from grace, but it's fighting back. It's fighting back. It's
10% growth, top line in you gotta sort of look at the companies that are growing their top line still and see, is there merit in a little trade here? Because we're trying to make some money out of this oversold tech stocks. Is UBN going to be one of them? No. However, I think technically thinking, you're probably thinking yes. I've got better stories, to be honest, but UBN is not bad.
I'll tell you what, Wolf, it's actually got one of the better charts.
Yeah, that's exactly what I thought.
Because what you've seen on that daily, you've seen that recovery. It started to swing. You've got a little bit of breakout.
Yeah.
Today, it's bounced over that resistance line. I could fully understand someone maybe having a nibble at this.
Oh yeah, look, the thing is, Dave, the thing is when you look at it, one thing that's going for it fundamentally is it's cheap. Market cap 38 million. You've got 12 million in revenues. That puts it on 3 times revenues, which is pretty good.
Well, you could buy that nice little. I'll tell you what. Let's give everyone a little stop loss on this.
If they want to have a little trade on this.
You could buy it at 70. It's pretty lightly traded, so you've got a high of 65, and I think you just got a stop loss at 64, right?
Mm-hmm.
So this one, if you're patient, could be a doubler for you, and you've got a 8, 9, 10% stop on it.
Yep, there you go.
Little trade there. Maybe a recovery play. Very, very good. Next, CCR, Wolf, an old favorite of yours.
Yes, who say have probably ventured too far to the wrong side for me, business-wise. So they've gone to that traditional debt collecting side. However, they still got that that's digital side of things. But the numbers, because they went down to that traditional side, the numbers have jumped up significantly to the top line, which is the revenue side of things. The market's sort of looking, that looks pretty good. But like I said, it's not as impressive as the market may be cheersing it today, due to the fact that it's still loss-making significantly. And like I said, I think there's better stories out there right now. In a rising interest rate environment, I think these are the companies you don't want to touch.
Well, so there's a few stories we looked at last night, and you did a little bit of a deep dive into some of these. So
yes,
let's go through them fairly quickly. So maybe you could just give a stay away or a like it scenario. VRS, not a bad little chart. Not a bad little chart. Breaking.
I'll tell you what, the best of the bunch that I looked through, and I looked through 5 stories this day, right? So this one is, let me have a look. It's new management, so it is spatial data, right? Specialized in spatial data. It's one of the bigger players in Australia. It is fairly competitive space, because I had a look through this morning. The good things, there is a turnaround in place. They're growing their revenues over the last 2 years, going to be profitable as well. Not a big market cap. It is a contracting type business, so it's not a tech story. Fairly boring, like I said, but it is growing, so it could be okay if it starts trending a little bit further than this for you, Dave. For me, it looks like it's on the up fundamentally.
Excellent. Well, thank you. Thanks for that.
Mm-hmm.
And if you were going to buy it, you've got a stop loss at 0.064 at the end of the week. DRX.
Okay.
A little bit of resistance, this story at 4 cents, Wolf.
Okay, first of all, I have to apologize for the person who asked the ATA question on DRX, because I don't know much about silica, right? And this is what this company is about. It's about a silica deposit up north in Queensland. So I had a look through that. They put out the PFS, which the numbers look fairly good, fairly robust, right? Of course, they're going to talk about big numbers. That's part of their job to do so. When I did have a look through what silica is used for, mostly for tires, I think 33% is used in rubber tires, right, for cars. So that's something that potentially is going to keep growing. So that's not a bad space. However, there's 2 things out there that maybe caught my eye that I'm thinking, okay, well, let's just wait. One is they've just done the PFS. They're waiting for the DFS to come through, and it should be here over the next month or 2, I'd say, right? Plus, they don't have the native titles as yet, which is a big issue, right? If they don't have, and the other thing is they are on the coast of pristine pristine northern Queensland. I don't know if the environmentalists will allow them to have the mine over there. They're probably going to start camping.
Right, not in the wrong area.
Yeah, I think so. When I looked at the map, I'm thinking, my God, right on the beach, pretty much. Can you imagine all the environmentalists going up there? I can see your wife, Tanya, going up there and protesting, chaining yourself to some tree.
Very, very good.
Anyway, so look, not for me, not for me. Let's wait for the DFS and let's see what the numbers say further and see if they can get this native title, see if they can push it further. But I think they're going to be stopped in their tracks, personally.
Wolf, CK, a little coal company, not a bad little chart.
Complete no for me, Dave. I had a look at it. Indonesia. No revenues is to speak of as yet. Really just way too risky. There's so many better stocks here in Australia, coal-wise. Pass. And I saw some photos, right? I had a look through their photos, and they should not do that, because you can see the pristine jungles just being completely destroyed. I'm thinking, us being environmentalists, I'm thinking, no.
Oh, it's terrible. The poor little monkeys, which are the ones that live there, the
orangutans.
Orangutans. Your father was one of those, wasn't he? Wasn't your father your orangutan, Wolf?
What sort of comment is that?
You look very orangutan. You're very peaceful, calm. You're very orangutan.
I'm orange with my orange hair.
In your nature, I think your spirit is very orangutan.
Oh, okay. Well, luckily you made yourself super clear. All right, let's keep moving.
Anyway, I've got to get through this session, but as my cold is about to knock me out. 14D.
All right, so I had a quick look through this one. So this is a technology play on energy storage using silicon, right? Again, it's going to be a long drawn affair. They're going to have to, pilot plants. They're going to demonstrate that it works on a commercial space, and they're going to commercialize it. This is another BRN for me, Dave. In a way, different, obviously, space altogether, but it could take years before it get anywhere. Pass.
Okay, just a trending stock, really.
Yep.
And VNT, last one. Now, I like this chart, Wolf.
Yeah, look, this is a infrastructure play. So they are going to be, they are looking after the infrastructure of Australia, right? Your power grids and all these sort of things. Contractors, not bad, boring, low margins. Pass. You can trend it, no problems. But pass for me. I think there's better stocks out there.
All right. Yeah, it does look like a good chart.
Yeah, profitable. It's growing, profitable, but the margins are very, very low. So not for me.
Yeah, a lot of these small companies. I was talking to a guy in the industry, Wolf, and the bigger companies, they're very sort of saleable assets. Because apparently, I was talking to a company. The bigger companies, they look for coverage, don't they? So they look at these companies. They don't look at them and say, all right, how much revenue you've got. They look at them and say, how much coverage can you get? Have you got, and how many doors can you open for us? So there's a lot of value in them for takeover targets or whatever going in moving forward. But listen, good chart. You can trend it. You can definitely trade it.
It's not. Look, it's like I said. It's not a bad story. But I think just fundamentally, I think there's better stories to play with at this stage.
All right, Wolf, listen, on that note, thank you very much. Go through those stories, some interesting ones there today. Yeah, interesting market, Wolf, and let's enjoy the bounce while we've got it. Hopefully,
we'll make a couple of bucks, right, on those tech stocks.
Yeah, hopefully. And you could see, you're seeing things like Little Whisper jumping up again, another 6%. So ALC looking a little bit better. So all good, Wolf.
Yes, exactly. Fingers crossed. Let's hope by the end of the week, we're going to make a couple of bucks.
Yeah, as long as my cold goes, that's all I care about. All right. See you, Wolf.
See you guys. Cheers.
Bye.
Bye.